Hey, good morning, everybody. It is Mike, and this is Saturday morning Multifamily Unplugged. I'm glad you're here. And you know what? If you're back for a second or a third time, thanks for finding your way back. You know, I always say that if you come back multiple times, we must be doing a good job. You know, if you're here for the first time, super glad you're here. If somebody told you about this show, super glad they did. Thank them for it. But buckle up this morning. I think we're in for a pretty good ride. You know, I have to tell you that this morning we were talking before the show. I was talking before the show with my guest, and, you know, he was saying some things, and I was like, man, we're going to have a lot to talk about. So real good connection here this morning. I could feel the energy, as I'm sure you'll be able to feel the energy as well. So hope you've got your coffee. If you're driving, you might want to pull over, take some notes on this morning. And for those of you who still need to follow us on social media, please do so. Subscribe to our YouTube, follow us on Instagram, you know, subscribe to us on LinkedIn and Facebook. We're always bringing you some great content. You know, what's cool is today we're going to talk about real estate. I'm not talking about one specific kind of real estate, but I think we're going to jump around a little bit based on my guest. I'm going to be joined this morning by Nick Gonzalez. Nick is from Winston-Salem, North Carolina, and I got a funny story about that when we get into this. Owns a brokerage, manages a fund, all around real estate professional, and let's get into it this morning. Nick, welcome.
Hey, Mike. Thanks for having me.
Oh, glad you're here, man. You know, I love doing these. And, you know, I mentioned a minute ago that, you know, my first couple hundred, I pre-planned them, I scripted them. And, you know, I just found that just didn't really go far, you know, and now these are so much funner off the cuff, you know, and after, you know, I think we're into 5 years of podcasts, you know, publishing a minimum of once a week. And, it's fun. It's fun to share information. It's fun to meet people, build relationships, connect with people. You know, some of the greatest people in my life today are people that we've connected together on a podcast. Either I've been on their show or they've been on mine, or we've swapped. So glad that you're here this morning. Great to meet you.
Yeah, likewise.
Yeah. So, you know, Nick, I always kick this show off with one question. And, you know, the reason is I'm going to write a book one of these days. So maybe you'll come up with an answer that will make the front page of the book. But in one word, what best describes you personally and professionally?
One word I would say would be collaborative. 2 words would maybe be, or I guess if one was personal, one was professional, would just be I'm a giver. So, you know, givers, matchers, takers. I very much fall in the giver category and collaborative category, which I think is one of the things that have helped me be successful. So that's the 2 words.
Yeah. Awesome. You know, I always find people like to push the envelope a little bit, you know, 2 words, you know, compound words, you know, so, but tell me why, tell me about the giver piece. What, you know, what is that in your life that you are obviously giving back or doing something?
Yeah, you know, your greatest strengths are a lot of times also your greatest weaknesses. I've come to learn that like over the years. And I think most people, if they're lucky enough, they learn it at some point in their lives. So, you know, there's a great book by Adam Grant called Give and Take. Probably my favorite book of all time. And it describes givers, takers, and matchers. And in business, you know, I've taught my brokers, and I've always been one to just be as generous as possible with knowledge. With like, I openly share notes with colleagues, competitors. Like, I'm never really concerned about like training new brokers and thinking to myself like, oh, what if I'm training future competition? Or, oh, if I help this guy become a really great broker, then I'm just going to be, you know, fighting him for deals down the road. I compare notes with other investors and fund managers in other markets and in our markets, because I just think the pie itself is infinite, right? Like we can both win. I don't only win as a byproduct of you losing. But that is how like a lot of people think. So I would say, yeah, generally speaking, like what that means to me is 10% of the time you're going to get taken advantage of. But if you're protective and you're good at setting boundaries and you're really intentional about it, the 90% of the time you don't get taken advantage of. It comes like being outwardly giving, generous, collaborative, and just like an overall good counterparty. Uh, Most of the time pays off if you're good at protecting yourself for the 10% of the time when it's never going to pay off and it was just a waste of time, or the other person was selfish or greedy and like didn't necessarily reciprocate. That book, sorry, not to go off on a super side tangent, but basically like the 20% of the most successful people in business and the 20% of the least successful people in business have a giver profile, and the 20% that fail are the people who get steamrolled, who are get taken advantage of, who are not assertive enough, who are not confident enough. And then the 20% of people that do succeed that match that profile are the ones who are generous with their time and resources and energy and always learning and all this other great stuff. But they insulate and protect themselves a little bit too.
Yeah. It's awesome. I think that, that's one of those universal laws, right? That, you give enough, it comes back, and might not come back from that person or that situation, but, somewhere along the line, down the line, it does come back to you. I remember years ago, when I first started listening to motivational, speakers and tapes kind of dates myself, but, that Zig Ziglar said, if you help enough other people get what they want, you'll ultimately get what you want, and I think it's so true. So, we're actually getting ready to go on a mission trip, this month. So, that's a great way, I think, too, to be given back to some less deserving people that, definitely need it, So,
That's awesome.
Hey, listen, why don't we jump in here real quick? Why don't you give a couple minutes of who you are, what you do, what you're working on?
Yeah. So I own a brokerage here in Winston-Salem with my business partner, Aubrey Linville. We've got 38 folks here. We do traditional general brokerage. We do M&A work for automotive and early learning companies. And we do brokerage primarily for investors. We also have a fund under our investment services piece of our company, where we last year we acquired $60 million worth of income producing real estate, mostly retail and industrial. We've got, I think we're up to like 88 folks in our fund that have invested alongside us. So yeah, primarily I am a brokerage owner, and fund manager, and all three of those have really great complementary, like overlapping skill sets, and all three of those like also couldn't be more different given the day, the week, the month, and what you have going on. But yeah, that's what I have going on. I've been in this business for 16 years. I have reinvested every single commission check I've ever made into single family, multifamily, and commercial real estate, which has been incredibly rewarding, and you never stop learning. But yeah, I invest a lot as well in all kinds of different asset classes.
That's awesome. Hey, I want to jump into this M&A piece that you talked about, specifically in the automotive business. Tell me what that looks like in your world.
Yeah, so there's a division of our company that's called Expand, and we really found a void in brokerage between what a lot of shops do, which is site selection work and like helping pair developers with end users, right? So like under the traditional brokerage model, there's so many national brokerages and boutique shops that if you're helping a quick loop concept really like the extent to which you're helping them is in helping them find good sites and markets that they're expanding to. And then sometimes you're teeing up like, oh, okay, well, I'll get this developer to tie it up. You can work with them, or maybe they have a preferred developer. But like it's kind of like one dimensional or like two dimensional at best. So what we've done is we've got about 35 clients between automotive and early learning, where not only do we help them with site selection, build to suit, ground leases, all that, but we also help them with M&A work. So we'll locate that operator in Chicago who's got 16 quick lubes and wants to sell all 16 of them, more like traditional business brokerage. What we found was like there weren't really a lot of shops doing all of that all at once. So there's a lot of shops that only do M&A work, and they're actually not that versed in the real estate piece of it. And there's a lot of shops that are really, really well versed on the real estate piece of it, but not that versed on the business aspect of it and actually acquiring an operating business with multiple locations. So the reason we're kind of focused on automotive and early learning is because you can't become an expert really on, I mean, we could become experts on more things, but those are the two that we've really, really honed in on, and we understand those businesses really, really well. So we're able to serve our clients really well in exchange. So again, it's a little more advisory work and M&A work than it is just strict brokerage work. And we've done that now, I think, in like 42 states.
Nice. That's awesome. Hey, so you had mentioned Chicago. That's where I lived in Chicago forever before I moved to the West Coast. And I remember years ago, one of my old companies that I had, a partner and I, we were looking at renting some space in a building in a suburb of Chicago, Elgin. And the tenant that was currently in there was a guy who owned like 85 Jiffy Lubes. So it was funny you said that. And I was like, man, 85 Jiffy Lubes. It was one of those things that you knew that, he was probably printing some money from those. That's for sure. So
they're also like very high margin, which is really nice. I've probably brokered 40 restaurant deals, and those are really, really great, but the margins are pretty rough. So again, like those two industries that we operate in, those are also like pretty margin rich, which
interesting.
makes them lovely clients if they're growing really fast.
Right. Hey, do you know Rob Roswell?
I do not.
This is probably a good connection for you, but I know that he is currently seeking to find some automotive shops in California to purchase. So I don't know if that's too far out of your reach or if that's a good connection for you or not. But I'm just trying to see if that would work for you. I can connect you guys.
Yeah, please connect us because we have a national database, and we have 6 or 7 folks just calling all day. Making 400 calls a week, building out our database. So if he's looking for something, chances are it lives in our database somewhere. So that would be a great connection. Yeah, for sure.
Trying to prove a point here to the listeners too about collaborative giving. So I remember I met a guy years ago who somebody took me to this guy's office, introduced me. And as I'm leaving his office, he said to me, hey, are you looking for anything? Is there anybody I can make a connection for you with? And I said, yeah, I happened to at the time be looking for, I don't remember the vendor, but he pulled 3 contacts out of his database. And as I was leaving his office, he was on the phone saying, hey, take a call from Mike, So, that goes back to the giving, right? I think you have to be a connector in today's world. You need to keep those connections open and build a circle of influence, a big database that you have the ability to do that. So in your brokerage, it sounds like you guys handle a lot of different asset classes. And, is there any one asset class that you like the best?
The one that's transacting the most in any given year is usually my favorite. But it's tricky because it's everything's so cyclical. So like I had 3 years where I almost exclusively did multifamily brokerage, and I love multifamily brokerage. I've invested in apartments. But you know it's gone through so many cycles in the last 16 years. Like I've sold the same apartment complexes in our market 3 or 4 times now, and it's doubled and doubled and doubled, and now the last person to have it, um you know now I wouldn't say we've plateaued in our market, but creating value 10 years ago was very different than creating value 5 years ago, which is very different than creating value today. So currently I really like retail just because you have this interesting phenomenon right now, at least in the states that we look in. So like in North Carolina is the third fastest growing state. South Carolina is very high growth. Virginia, where you can't really build new retail for a price point that makes sense relative to what you can buy it for, relative to like where rents are versus where they should be, which is exactly what happened with apartments. For the longest time, it was like, hey, I can buy these apartments where the average, if the units were renting for $825 a month or $895 a month, I know I can push those to 1,050 or 1,100 if I put a big capital infusion into the apartment complex. Well, now, like with retail, we're seeing a lot of similar value in those states where we can find a complex that, like, if you had to build it new, it costs you $330 a foot. The rents are 18, and if you can just do a little bit of a lift, you can get those $18 a foot rents to 26 or 27 or 28. Which again is like, you can still do that on apartment complexes. You just have to be highly specialized and like know what you're doing. So again, industrial rents, I think in the last 4 years, the last 4 years are up like 38% in our market. So again, like with multifamily, we saw that like humongous COVID bump and bumps through 22 and 23. And I think things are starting to kind of pick up a little bit too on these like amenity rich, nicer complexes. But I would say right now most of our focus on retail, just because that seems to be where there's a lot of value, and it is moving quite a bit. With a very close second being industrial, but it's all cyclical. I mean, we just need like if rates go from, if rates for the normal investor go from 6.25 back down to 5.25, multifamily I think is also going to be full of really great opportunities again. Similar to single family, all these people are sitting on stuff. All these single family folks are sitting on loans that are at 3.4%. So it's trickier for that product to move through the pipeline right now until we see rates adjust a little bit. So I gave you a very long-winded answer. I love retail, I love industrial, and I have a big spot in my heart for multifamily, but that's been trickier to broker over the last year and a half than it has in the past.
Well, I'll tell you what, I love multifamily, and the market you're in, that Triad area is really a market I like. So make sure that I'm on your buyers list, please.
Cool. Yeah.
For any multifamily deals that come up. I said I had a funny story about Winston-Salem. Years ago, I owned, I don't know, a dozen townhouses in a redevelopment project out there that was going on, that we bought just before the 2008 downturn. And we owned these townhouses, and 2008 came around and we just got crushed in them, but similar to what
there's a good chance maybe I've sold them, because
maybe
2010, 2011, 2012, most of what I was focused on was bulk single family sales. So we were selling 30 houses as a portfolio, 20 houses, 20 townhouses. So we got to work on a lot of that at that time.
Yeah. Interesting. Yeah. But, I love multifamily. Now, I guess you have a fund that you've raised some money in. Let's talk about your fund a little bit and what you do with that.
Yeah, my business partner and I, we've been investing together for probably 10 years. We kind of without realizing it, we're doing it. Um, it we would find great opportunities that the two of us couldn't take down only ourselves. And so we would informally really pass the hat around to friends, family, and investors in our network. After 10 years of doing that and growing a nice portfolio, about a year and a half ago, we realized there was probably a way to do it with systems and processes in place that was maybe a little more programmatic. We're a little bit different than your typical, fund manager, syndicator. We we invest in every single deal we do, and usually it's more than just like your token amount that like a sponsor or a GP might put in. We also will frequently sign on recourse debt, which is something a lot of sponsors and GPs don't want to do. We don't always do that, but where it makes sense, we will. Just because, again, like it's our money invested alongside of our LPs. So yeah, I mean, we've typically only looked at strong existing cash flow in good markets with, again, like I don't want to like oversimplify what we're doing, but we're buying 7.5 and 8 cap properties at a 9.25, 9.5 cap, given our ability to find stuff off market, given our special relationships with other brokers in the Southeast. So we're really focused and heavy on existing cash flow, no crazy assumptions for some exit that may or may not happen if these 6 things happen all at the same time and all correctly. Yeah, and it's a customizable fund model. So the folks in our fund can opt in or opt out of opportunities as they arise. So it's not just like a nebulous, like, oh, we're going to buy this in the Southeast, which is fine. Like there's nothing wrong with that. It's more so like, hey, come live in our ecosystem. You're going to get to see every deal we do, and the ones you want to participate in, you can either opt in or opt out and put your money to work on those. Because there's a chance you might not like deal A, B, or C, but deal D is gonna really connects with you for some reason. So yeah, we're pretty proud of what we built. We bought $60 million worth of real estate last year. The 2 biggest acquisitions were 2 retail shopping centers. One was earlier last year, anchored by Planet Fitness here in Clemens, North Carolina, and then another one was a B plus retail shopping center in Hampton, Virginia, with Buffalo Wild Wings, Five Guys, H&M, just a roster of really good tenants there, and just immediate cash flow. So that does take up a good chunk of time. I love working on that. Like it gives me immense satisfaction making other people money, let alone making like myself some money in the process too. But that's been incredibly rewarding, and just a lot of fun to work on.
Yeah, nice. Boy, what a great focus to have that you're working on. So, and that's primarily, so in that fund, you primarily are investing in some type of commercial asset, whether it be retail or industrial or multifamily. You're not doing any single family investing in that at all.
No, single family and multifamily, again, like I broker quite a bit of multifamily. I love multifamily, but you have to have a really good skill set and operational efficiency, and it's just not our strong suit. Like I've owned lots of apartments, and I think if we only specialized on multifamily, we could have a lot of success with it. But you have to be really, you have to know what you're doing. Um, and multifamily and single family is not our strong suit. I owned every commission check I made when I started out, I'd go out and buy real estate, and I started in 2010. I mean, my last job before real estate, I was working at IHOP. So like I didn't start with a big pile of cash. I started with a $1,500 commission check from selling some foreclosed single wide or a double wide. So I got up to 30 rent houses by 2012, and I was flipping single family houses as well at that time. I think I flipped between 35 and 40 single family houses. And I mean, I loved it when I was in it, but it's got to be your focus. Like
Right.
nobody can do everything. So like that was great. And I leapfrogged from single family into multifamily. And I loved multifamily when I was in it. But it's got to be, you got to have a really good, deep focus because multifamily can be operations heavy and some like you have to keep your eye on it. Like
Yeah.
you could have the best manager in the world, but you're still micromanaging the manager to some extent. You know, like you have to be involved if you want to make sure everything goes the way it should.
Yeah, I'm 100% in agreement on that. I say that, these deals are made and broken today at the asset management level. Because if you can't manage your manager, you're going to struggle. And, we've got a couple of assets that have been challenging over the last couple of years. A couple assets that were challenging that we're turning the corner on. And, listen, we have interest rates on some of those deals under 4%, and they've been tough. I can't imagine if we were in a negative yield position with a higher interest rate where we would be. But I think that let's talk about market cycle, right? I think we're coming out of this downside of this cycle. My opinion is the next few years we're going to have the wind at our back. And that this is the time to get into real estate, to get into investing, whether it's retail or multifamily or single family. What's your opinion on that?
Yeah, I think the worst. So I think you should always be prudent and diversified. But the biggest mistake I see investors make is just sitting on the sidelines forever. And so, you have to have money and you have to be a participant in the game if you want to hope to like achieve anything, right? So that paralysis of overanalysis, that like pause, that like again, don't just jump in head first, but you have to get in the market no matter where we are in the cycle. Because in real estate, if you're reasonable in your assumptions, like, you look at these deals where it's people project, 15% IRR, 20% IRR, whatever. I mean, like, whatever the projection is, if you're in a deal responsibly with a good operator, whether you're the investor or you're investing in someone else's deal, like there's so many ways to set it up where worst case scenario, you just made an okay or a good return. Like there's catastrophe, there's disasters. Maybe you lose, I mean, very rarely do you lose 100% of your investment in real estate, period, end of story. So like your downside oftentimes is partial loss of investment. And again, that's also depending on how you set a deal up, not a super common scenario. A really common scenario is, hey, if the deal doesn't go the way we think it went, you still made an okay return. You still made 7, 8, 9, 10%. So
Right.
like I see a lot of these syndicated deals where it's like people will project these 25% IRRs. And I don't always buy that. Like I don't always buy what's being presented, but we have so many deals where I'm like, man, like even if everything went terrible, nobody's going to come crying to me if they made 10% a year for 4 years and then got their investment. Like that's still great by most standards. So I think the cardinal sin really is just sitting on your hands and not doing anything. And it drives me crazy when I see folks who have done that for 3, 4, 5 years in a row, because I keep hearing this narrative, especially on multifamily. I keep hearing this narrative of like, oh, there's going to be so many opportunities coming online. Oh, like there's going to be a wave of loans that are coming due, and that's going to create these unbelievable, amazing, crazy opportunities that like, okay, well, but you just lost 5 years on a thesis that like may or may not come through of money that could have been doing something for you in the meantime. So yeah, like not be conservative, but like put some money to work now, put it to work a year ago, put it to work a year from now.
Right.
Because dead money is dead money. And you're never going to time things perfectly.
Yeah, for sure. As we start to land this plane here this morning, tell me what your opinion is on creative financing and how, little or no money down strategies will work into or do work into any type of real estate acquisitions or your M&A business for that matter.
Yeah, that's an interesting question. So I go to these investor conferences once every 2 months, where eh, a lot of the underlying theme is creatively structuring deals, whether it's little or no money down, or are you is it more of like an equity exchange versus a traditional outright purchase? So my opinion is going to change as an investor, a broker, and all this. So I'm going to give you a couple of just like high level thoughts that may be helpful for you. So when I got started out, I did several deals using subject to. I did several, so purchasing a property subject to someone's existing financing in place, which was easier to do in 2010, 2012, 2013, all that at that time, but can still be done. I did a lot of deals utilizing hard money and bridge financing. In fact, the very, very first flip house I did when I had really like no money, I found a deal and I called every attorney in town, like literally alphabetically, just called every single attorney. I was like, hey, this is the deal. This is what it looks like. I'm going to get in there. We're going to flip it. Here's how much money I need. Will you give it to me? And just tell me, like, at what terms will you give it to me? And every single attorney said no. So I went one town over, pulled up the yellow pages, and I just happened to see an attorney's name who I was like, oh, that's a pretty good name. His name was Norman Sloan. He's actually passed away now, but he was a huge impact on my life. So I called Norman Sloan because I was like, oh, the guy has like a powerful sounding name, and pitched him the deal. And he was like, Nick, I don't think I want to do that with you, but that sounds like something my dad might do. And Norman was probably like 50. His dad was probably in his early mid 70s. So we went out to lunch. And by the end of lunch, I left with a $70,000 check to fund my very first flip. But the reason I'm bringing that story up, I think creative strategies are great, but I also think people sometimes, if you have a deal, the money will follow. And so I think like the fatal flaw that some people do is they spend like 10 hours trying to figure out how to make a deal happen before they even have something to pitch. And you certainly can't do the opposite, right? You can't willy-nilly just like go tie up a property for the sake of tying it up and then hope and pray the money's going to fall in your lap. But it's like somewhere in between. You kind of have to know that you've spent enough time building a network where you can pull a deal off creatively. But you also like if you have a deal, the money will follow. I mean, I've funded so many of my early flips just calling on high net worth people, like asking for introductions. And again, like in this market, a lot of people will be open to owner financing. So I have seen that in my business, owner financing is becoming more and more and more of a thing just because everybody thought rates were going to be lower by now already. So we've in the last year we've done a couple like seller seconds. So we sold. I had 2 car washes that I sold myself personally, and we gave the buyer a seller second essentially that helped subsidize his down payment. The lender was fine with it, the buyer was fine with it, we were fine with it. So like any number of creative strategies it's like a Swiss Army knife. Like you have to have like 10 tools if you want to be able to close an extra 3 deals next year. Maybe one of them is creative and 2 of them aren't, or maybe 2 of them or 3 of them are or aren't. But if you don't have the tools, then it's just math. Like you're going to have less deal flow unless you have an unlimited pile of cash, which nobody has. So yeah, my thoughts are you just have to be, when you're a broker and somebody calls you and they open with, hey, what do you have where the owner would owner finance? As a broker, that sets off like red flags because you're like, oh, I don't want to mess with this bozo. I mean, again, like not to be overly simplistic, but if as a broker somebody calls me and they're like, hey, can we get together for coffee? I want to tell you about some of the deals that I've done. Like, I would love your opinion on what you're seeing in the market. And by the way, like, I'm a buyer for any of your properties where, maybe there's some sort of option for a lease purchase or owner financing or subject to, or then that becomes like a totally different conversation where it's like, okay,
Yeah.
you're being strategic about this, so I'm willing to be a little strategic with you in exchange. But it's all about how you present it. And same thing when you present it to a seller. I get these offers where it's like, here's option A, option B, option C, and it's like the very standard like template of like, I mean, basically it's all like owner financing or optioning someone's property. And that's very, very different than being like, hey, can I have a Zoom call with you? I want to like walk you through my option. Like it's all about presentation.
Yeah. It's awesome. Yeah, I love creative strategies. I first got into real estate because I went to a Robert Allen seminar back in the 80s, and learned how to buy real estate with no money down. And first deal I ever did was a 4-unit with $1,000 out of my pocket. The owner held the paper, and I cash flowed $450 a month for years. So I believe in creative strategies, and I think we're in a market, as we're coming out of this market cycle and interest rates are still at the higher end. I think there's just so many opportunities out there, and you don't know unless you ask. So,
and you just have to find out what motivates people. So like, I'm just gonna give you like a super basic example, but a lot of people don't realize that like an option fee, and like optioning someone's property, option fee isn't taxable until the sale actually happens. So you bump into these people where it's like they might not be a good candidate for you to pitch something too overly complex to. But if you can tell somebody, hey, master lease your property to me for the next 2 years, and by the way, I'll give you a $20,000 option fee, which by the way is not taxable because it's an option fee. Like you may have proposed any number of other solutions to them, but in their head they're thinking, oh my God, I'm gonna get this monthly recurring master lease payment, and I'm gonna get 20 grand tax free up. Like, so it's all about how you frame it with people.
yeah.
But I agree, people are willing to be more creative now than they were 3, 4, 5 years ago for sure. But people are always willing to be creative if you dangle the right carrot.
Yeah, I love the master lease. I've done so many deals over the years using a master lease. So, hey, Nick, great having you here this morning. Tell people how they can reach out to you and get in touch with you.
Yeah, so the name of our company is Linville Team Partners. I'm pretty active and very visible on LinkedIn. So you can find me on LinkedIn, Nick Gonzalez. You can find our website, Linville Team Partners. All the information on investment services is listed on our website. So yeah, I mean, I'm not terribly hard to find. I have a somewhat common name, but I'm pretty out there and visible. So yeah, I really appreciate you having me. If you have time for one more quick story, I'll tell you one that was on my mind.
Love to.
So it's a story of how my dad got his start in real estate, and so my dad's Venezuelan, and he went to Miami in the late 60s, maybe early 70s. My memory's not that great, but he went to Miami and had a background in construction as a Venezuelan, kind of coming to the U.S. to find his his American dream. And he had originally started trying to find more traditional jobs that he could work, but in getting to know Miami, he found this office building that was essentially in foreclosure at the time, needed to be renovated, and he thought it was a really great opportunity. So he put together a little pitch deck, and he started shopping this deal to different banks in the area, and everyone said no. They were like, "Man, you're crazy." It was a substantial loan at that time for someone who like really had no assets, no income, and no track record. Well, my dad went into this bank and he talked to the loan officer, and English is a second language. He can tell this other guy English is his second language. And he goes, "Hey man," he goes, "Where are you from?" He goes, "Oh, I'm from Caracas." He goes, "Oh, dude," like they start talking in Spanish. He goes, "I'm from Caracas too. Like, where did you go to school?" "Oh, I know Manolito." "Oh my God, yeah, he's my neighbor." "Oh wow." So they really hit it off, and this poor banker took pity on him, really. and said, hey, listen, I don't think we're going to give you this loan, but let me just give you like a soft quote term sheet for you. And I want you to take this term sheet and show it to every other bank that's turned you down and tell them that you'll consider doing the loan with them instead if they give you a better rate. And I was like, man, I don't think that's going to work. And the guy goes, hey, it might not, but it doesn't. Like, if you walk in there with confidence and don't ask them for a loan, tell them you'll be willing to take their loan if they give you a better rate. And I was like, okay, yeah, I'm willing to try. So the guy gave him a totally non-committal, like, these are terms we might consider giving you, like, it's, but this isn't an obligation, whatever. And so he went back to all these banks and walked in with confidence. It was like, hey, if you beat them by 25 basis points on the rate, I'll give you the loan instead. And literally the bank next door funded him, and that's how he got his start, purchasing a commercial office building and renovating it. And again, like, the moral to that story, again, is kind of back to what we were saying earlier. It's all about how you frame the question. Like, when I was calling people for my first loan, maybe one of my faults was like, hey, here's what I have. I'm super excited about it. Like, tell me under what conditions you would be willing to give me 70 grand, versus when you bring someone a deal and you say, hey, everything's teed up and ready to go. Here's exactly what I need. And here's exactly what you're going to get in exchange for your 70 grand. Again, it's two very different value propositions. But yeah, anyway, that was the story I wanted to share with you. It's a fun one.
Yeah, that's awesome. Yeah, it's, again, creative, right? So somebody else helped your dad be a little bit creative. So good for him. Hey, I appreciate you. Thanks for being here. I am going to move you to the back room. If you hang out with me for a minute, let me say goodbye, and we'll catch up afterwards.
Sounds great.
Thanks, Nick.
Thank you.
Hey, everybody. Great episode this morning, right? Great show. I'm so glad that you were here. We covered a lot, and Nick is definitely somebody that's got a lot of experience, a lot of knowledge. So if something fell in your niche and you like that Carolinas market, Nick is definitely somebody to reach out to and pick his brain, see if he can help you. And if you have some collaboration with him there, because he likes to give back. So appreciate you being here this morning. We're here every Saturday morning, bringing a new guest and delivering some content that's going to help you on your real estate journey. We're in this market cycle right now where we're starting to cycle out. And I couldn't encourage you enough that if you've been sitting on the sidelines waiting to get into real estate, either as an active or a passive investor, that timing is everything. I've waited decades to find the time that the market was changing and I could get in before that market changed. Because if we wait until the news media says, hey, the market has changed, you've already missed 2 years of that change. Get it from the beginning, have the wind at your back, and grow with the flow. And if there's anything that I can do for you, don't hesitate to reach out. Have a great week, everyone, and we will catch you next week.